Hey, Dan Passarelli here. I've got a few things that I'd like to talk about that I am finding interesting here. So, first, one of the things that I haven't been talking about a lot lately, and seemingly like nobody has been, is what the expectations are for the next Fed meeting. The next Fed meeting is right around the corner. It's 13 days away on March 19th. There's the federal funds contract at CME Group is pricing in an 89% chance of no change in interest rates. One of the reasons we care about interest rates is because it competes with the stock market. If people can put their money in, guaranteed-ish, nothing's guaranteed in life, but pretty much guaranteed, fund and earn a decent enough interest rate, then they would rather do that than put it in the stock market, which is arguably riskier. But if interest rates are lower, then that's going to push stock prices higher. But the other reason that they're relevant to talk about is because if we continue to get inflation, which has been a lot more in check than it has been, if we continue to get inflation, we might have to raise interest rates. But tomorrow we have unemployment, the monthly unemployment figures coming out. And if the economy is looking worse there, we would have to cut interest rates, which, if it's just a little bad, could be good for stocks. But if it's really bad, the economy, as far as the job market goes, then that could actually end up also being bad for stocks, because corporations would be likely to make less money. Now, the other thing that is relevant to look at here, and this I find to be pretty interesting. If we go to like the skew, and let's just look at maybe like let's look at these let's look at the 15-day option, or let's look at the 29-day options. If we look at the put skew, and let's look at more of them. The at-the-money volatility is 21.6. Going all the way down to the 550 strike, it's only a 25 volatility. It's a little weird that the put volatility isn't sharply higher than where it is now. So to me, that leads me to believe that investors and traders aren't very concerned about too much further downside movement, and maybe even selling puts, which is one of the strategies that I'm implementing right now, to hopefully, get assigned, or if not get assigned, sell some volatility that isn't going to, that you're going to skate on and get to keep. So there's a surprising lack of fear, especially considering the VIX is at almost 25, but these downside puts, they're just not as bid up as I would have expected them to be. So, tomorrow's number is going to give us a lot of insight. Anyway, I hope that helps. If you are not subscribed, please subscribe. It's very important to make sure you get these videos every day. That said, have a great rest of your day. Trade smart.